Hey, Halifax, Brenda K here with sweet Miss Frankie beside me. Today we're talking mortgage insurance, and we have Mr. Gord Pye on with us today. Gord, thank you so much for joining us.
Well, thank you so much for having me, Brenda. This is a great opportunity.
It's a great topic too, Gord, because a lot of people don't realize, they get their mortgage, say they get their mortgage at the bank, and the bank sells them the mortgage insurance, which
Right.
I did for years. I would pay those crazy amounts and then until I met you and
Right.
found out that
And
it doesn't necessarily have to be with the bank.
that's right. And bank insurance, mortgage insurance is better than having no insurance. There's a couple of issues I have with bank insurance, and that one, the underwriting is done at time of death. So normally when you buy bank insurance mortgage insurance through the bank, you're buying, they ask you 3-4 questions. They're not licensed to sell insurance. They have to ask you some very quick, easy questions. So they don't really do a proper idea as to how much coverage you do need. They know they need enough to cover the balance, the declining balance on your mortgage. So sometimes you find after you've passed, or you don't find, but your estate will find after you've passed, that you may not actually have had coverage. Your spouse will find out that you didn't have coverage, you didn't qualify for the coverage because you may have answered the question inaccurately. Not that you were trying to be wrong, but you may not have understood the question that they had asked, and then you answered it wrong, and now all of a sudden you don't have any coverage. So it's in my opinion, better to have proper coverage done through a insurance provider than it is to have bank coverage. And in most cases, it's not any cheaper to carry bank coverage. People think that, oh, it's just cheaper, it's quick, it's easy. It is quick and easy because you're there doing your mortgage anyway. But just because it's quick and easy doesn't necessarily mean that it's better.
Well, wasn't for me
No.
because I don't know if you remember when we met. Like I was paying like $120 a month with my bank mortgage, and it was only for the amount of the mortgage, and the payments never went down, but what they would pay out, of course, over time would go down.
That's
And
right.
then in addition to that, I had to have a life insurance policy on top of that
That's right.
outside.
And that's right. And you needed extra coverage, and some people do need extra coverage for other debts and other reasons, whether it be young families, whether it be business opportunities, or whether it be whatever. And in most cases, if you are definitely combining 3 and 4 different policies, it's definitely cheaper. When you look at how much coverage you really do have, whether it be a car loan that you have some coverage on, whether it be a Visa balance that you're carrying that you need some coverage on, whether it be again, a business opportunity that you need some coverage on. When you look at combining all that, insurance is like most other things. When you buy bulk, you get cheaper rates. And so if you do combine, say, geez, I need $200,000 or $300,000 for this and $200,000 or $300,000 for that, and you combine it to a $600,000 policy, one $600,000 policy is cheaper per thousand than 2 $300,000 policies, or 3 $200,000 policies. So you're much better off that way. So,
well, I remember when we were talking about that, because I was floored. I mean, we've known each other many, many years now. I was floored when you had said to me, like, what I was paying $120 at the bank for the exact same amount, your rates were like, not your rates, but the company you represent were like $60. So right. For now, I mean, and the thing is, a lot of people think, well, I need enough money to pay off the mortgage, but you've got the funeral arrangements, and maybe you have business or visa that, well, if you're the main breadwinner of the family, you need to leave something for your spouse and your kids.
That's right. You need, to do a proper insurance plan. You should look at, what kind of, you want to leave some money for education for your children. You want to leave some cash there for your spouse so that they don't have to go out and find somebody new to marry the next week and try to replace that income. So you want to be able to make sure that you do have proper planning. And in most cases, if you do the proper planning and do the proper look at the proper situation, in most cases you can provide the right amount of coverage for less than what you're actually paying at the bank in a lot of places. The other issue that I have with bank insurance is that if you have your insurance through XYZ Bank, whatever letters you want to get, you're stuck with that bank if your health changes. So if you become diabetic down the road, and all of a sudden another bank offers you a much better, either a lower interest rate or a better mortgage product, or at least a different mortgage product, something that's more what you want, you kind of have to stick with the one that you have, because you have to keep that insurance there. You wouldn't qualify for insurance you may not anyway qualify for insurance at the new place. So
That
it's
is
better
such
to
a
keep
good
your
point. That
yeah.
is
So it's
such a
better to
good
have
point.
your own coverage. Then you're totally in charge of your own domain as to where you want to go. If you want to go to a different bank, you want to go to a credit union, you want to go to whoever, you can go to wherever you want to go to, and you're in charge as opposed to the bank being in charge.
Mm-hmm. So let's talk a little bit, back it up a little bit when you talked about the underwriter. So let's just let our viewers know what you mean by underwriting and what that entails.
Well, normally when you do it at a bank, they'll ask you 3 or 4 questions like, are you a smoker? Are you not a smoker? Are you diabetic? Are you not a diabetic? I can't remember what else they ask you. But there's 4 different quick questions where we normally get into a little bit more. We normally will take blood sample, make sure that everything's good, and we'll talk about a lot of other. So we send it off to a doctor who then comes back and says, well, this person's healthy, or this person's not healthy, or there's an issue, or there's not an issue. And in that way, it's the underwriting is done at that point. So then you have a contract saying that you are covered for whatever. Whereas through the bank, they do their underwriting upon a death. So if you do pass, then they come back and say, oh, you said you were a non-smoker, but we see that there's nicotine in your system. We think you were a smoker. We think that you lied. Not that you might have had a cigarette 2 years, maybe before you, because I think the question is, have you smoked in the last 2 years? And they come back and find out that you did smoke, but you might have been at a party having a few drinks, and all of a sudden maybe you had a cigarette. And you're not a smoker per se, but according to the insurance industry, if you had one cigarette in the last 12 months, you're technically a smoker. So when you do it, you're privately, they actually investigate your blood, make sure that you're okay, make sure that everything's good, whether your sugars are higher than what they should be. Again, a lot of us don't know that we are diabetic until we find out that we are diabetic. I was diabetic for probably 3 years before doctor did the test on me and said, oh my goodness, you are diabetic. Right. So I would have said, no, I'm not diabetic. But then if I would have passed, our insurance wouldn't have covered if I would have had it through a mortgage planner, because I was diabetic. I wasn't diagnosed as being diabetic, but I still was diabetic
without knowing
it. So
with a bank, when you take it out of this bank, as long as your mortgage is with that bank and you're holding that mortgage, which could be 20 years, you're covered. With yours, how does it work?
Well, you can buy different types of coverage. You can buy a term for a 10-year period. I normally recommend a 10-year period because I don't know what your life's going to be like in 20 years, let alone in 10. But I do think that we can kind of give some kind of indication or some kind of idea as to, in the next 10 years, where we're going to be, so in 10 years time, you may owe a great deal less, and you may say, I don't need $600,000 worth of coverage. So in 10 years time, we may only require $400,000. So we could request a new policy in 10 years time at a great deal less. You could be in a situation where you've maybe taken on more debt. Maybe now you have a cottage, and maybe now you have, again, some business opportunity. Maybe you do need more. So now you need to take on more insurance. So I like having, again, I like being in control. So I like having more control over the time frame, as opposed to having it set for 20 years and knowing that, again, it's on a reducing balance. I like to know that it's a set amount. Again, if I'm paying the same amount of money, or maybe even a little bit less, I'm going to get better coverage or longer term coverage and a full amount. I think that's a much better plan for most of your listener audience, as opposed to having a reducing balance on your mortgage. Because again, if you take a 20-year mortgage and it's a $300,000 in 19 years, and you pass away, they pay off the last $10,000. Whereas if you had your own plan, you or your spouse would still get $300,000. They would pay off the last $1,000, and they would end up with the other money to do whatever else it may be. Like you said, like there are other expenses, whether it be funeral costs or looking after children or whatever. It's all that. Of course, that also changes over every 10 years normally as well, because you could start out your life with no children, maybe even no spouse, and then all of a sudden add a spouse, add a couple of children, And that's when we really should be doing an insurance review and making sure that you have the proper coverage over that time frame.
Yeah. Now, so just so that we give kind of both sides to the viewers, if I'm with a bank and I keep it over, say, the 20-year period, if in year 9 I develop cancer, I still know I'm covered for 20 years. With going with the term of 10 years, if I develop, say, cancer in year 9, and then I go to you and I say, oh, my insurance is up, it's 10 years, am I out? Am I done?
No, most coverage, most big carriers, and I would say most, I think there's one or two that don't, but most big carriers you would have what's called renewable in coverage, convertible and renewable. So at 10 years time, they will automatically renew it to a new. They'll take that same coverage. If you had a $400,000 coverage, you will still be able to qualify for that $400,000 coverage. You could reduce it at that point. You may say, oh, geez, I don't need $400,000. I'll take a much lesser amount. Maybe I only need $200,000. You have the ability, again, you are in charge as opposed to somebody else being in charge, but you do have normally the institution has to, as long as when you buy insurance, you buy the proper coverage. When you buy the renewable and convertible policy, they have to offer you the renewable amount. Sometimes it's more expensive.
Yes,
even if you're diagnosed with cancer or whatever, it is sometimes more expensive, and that's why you say sometimes you may take a reduced amount. So if you had a $400,000, your renewal amount may come in at a higher monthly payment than what you're expecting, and you could then cut it back to $200,000 or maybe $300,000. You are in charge as to how much but they have to at least offer you the $400,000 that you presently have, or whatever the balance was that you presently offered.
Yeah, but on the downside, it could be more money.
That's the issue, is that sometimes it could be more money. So you do have the opportunity, though, when you first buy it, you can go with a term 20, which will hold that price for 20 years. Again, I look at it that I think that your world changes a lot between 10 years, but for some who are conservative and want to make sure that they have that prepayment, that payment set for the next 20 years, they can definitely go with a term 20, and then that payment is set for 20 years. And there's some out there that will actually do a term 25, so you set for 25 years. So
if I was, say, 2 years away from my renewal, could we meet sooner than that renewal? And
normally I recommend that, similar to doing a financial plan, I would recommend that you should sit down every couple of years and review your insurance needs and do an insurance analysis, because what you need, again, that's why I do 10 years, because what you needed 3 years ago may not be what you need today. You may need more. Your life has changed. I know if I look back 3 years ago before the pandemic, my life was totally different than what it is today. So, I would think that most people are in the same situation, that their life is different today than what it was 3 years ago. Mm-hmm. So if every 3 to 4 years, you should do a insurance review and find out, geez, I need A, I could need more. B, I could need less. I paid off some debt. My kids now are old enough that they look after themselves. I don't need to have that cash flow in case that happens. I still would like to have some for my spouse, but I don't need that 600,000. Maybe I only need 400,000 or whatever the number is. So yeah, I would definitely review it every 3 or 4 years, and you can always apply for new coverage. Over the last 5 years, term insurance in most cases has come down. The way insurance companies work, of course, is they charge you a monthly premium. They have a huge computer program that says that they can almost tell you when you're going to die. So they do a calculation, say, okay, you're going to die when you're age 82. And if you live past 82, then there's Frankie. Hi, Frankie.
Yeah, Frankie's here.
So if you live past 82, you win the insurance pool. So, but if you pass away early, then your spouse wins the insurance pool, because they get the money and you don't have to pay as much for it. But see, Frankie makes me lost my train of thought.
She's always right here. Yeah,
she's right there with you. That's good.
Oh yeah, always. Yeah. But what we were saying is, so that if, because say mine's due in 2 years, I'm still really healthy right now. Anything could change.
Right.
I want you to come over. Well, actually, you are coming over, and I want to renew it now.
Right.
I want to talk about it now, so I can do that.
the last 5 years, insurance has come down because people are living longer. That's what I was going to say, is that people are living longer. So companies are able to, when I first started 25 years ago doing this, the life expectancy was around 68 years old for a male. Now they've pushed that out to 76, I think it is, for a male. So over the last 25 years, men are living longer. Females have always lived longer for some reason than men anyway. Males do anyway. You have a much stress, not near as stressful.
We're so much sweeter, Gord.
You are so much sweeter, and you have Frankie to take away your stress.
That's right. I do. Well, Gord, I thank you so much. I know that, I'm happy to send clients your way when they're buying homes and let people know, because people get caught up buying their home and they're thinking, they don't realize, they think mortgage insurance is what goes like CMHC, and they don't realize how important it is to have coverage if, including you do disability also, right?
That's right. We do disability and critical illness as well, which is a fairly newish one for the last 10 years or so in the Canadian industry. But both of them are very important, and people will ask what's better and what's worse, but they're both very important. They're very different, but both very important. Yeah.
Well, I thank you so much. And I thank all of you for joining us today. And what I'm going to do is, in the description, I'm going to put Gord's name, his email, his contact information. And if you have questions for Gord, you can reach out direct for him. I thank you so much for tuning in. I'm Brenda K. If you enjoy my videos, please hit subscribe. You'll get one every week. And Gord, always a pleasure. Thank you so much.
Always a pleasure with you and Frankie. We'll see you.
All right. Talk to you later.
Bye.
Okay.
Bye.